investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Thursday, the 26th of January. We're looking at the Dow, and this is going to be quite important, actually, because the Dow had a nice rally early on. It had a fabulous turnaround from the 50-period exponential moving average. It just screamed back to the upside. It made a peak, a gray peak A yesterday, because by fractions, I mean, I love this. Look at this. On what day is Thursday? Wednesday, Tuesday. On Monday, the Dow rallies strongly to the 33,782.88 level, pulls back the next day, and then comes screaming back and makes a new fractional high at 82.92. And then yesterday, what was the high? 33,007. Let me just move this over a little bit here. There it is, 33,773.09. Just a tad under that, but that makes it a gray peak A. Why do I say gray? Because the stochastic's still only at 55%. On balance volume is terrific. Finally, we got that moving. But there's a flat MACD. A flat MACD says you continue the last up or down candle. In this case, it's still an up candle, so the momentum is still to the upside. And the 9 was so close to flipping to negative, the 9-period exponential moving average, the green line, and it didn't. It held above the black, but it's really close. So I consider that we're in we aren't in an all-clear mode right now. And the reason why I say to subscribe is we're going to step back. We've tightened up stops in certain positions. Got taken out on some. Still long the Dow, still triple long the Dow as well. But this is not a period for playing games because it's really selective in the sense that the Dow, as I've mentioned now for about 2 weeks, I've been saying, I'm anticipating the Dow is going to slow down its upside momentum. It's already done what it has to in the weekly chart. It's forming a rectangle formation way above the Chapman Wave inside track. What was a repellent zone is now a propellant zone, as well as the 14-period moving average in the weekly. Look at that black line, how it just propels the price higher above the 9, and then the price goes higher than that. And I was asked, could I talk about the monthly chart? I really want to wait until Tuesday. Is that Tuesday? Yep. No, yes, Tuesday is the last day of January. Anything can happen, and we've seen that time and time again in the last couple of days of a month. Anything can happen. I'll tell you what I would be looking for, and that is for the Dow. Maybe by Tuesday it doesn't break above 34,342 and it forms a peak A, but we're still so close to it that in fact what happens is in February it squeaks above it and we start our gray leg B. Now if that's the case, then the S&P right now, the S&P is trading up 7 at 4,023. It ran all the way to 4,052. So this is a leg F/B. I'm watching this very closely. Look, I've got no follow through on the on-balance volume in the daily. The weekly chart is okay, and it is attempting for the first time in a while to actually hold all the way through a couple of sessions of the week above the green 9-period, the inside track repellent zone. Now, I was asked about the monthly. Well, it looks to me like it's going to be really hard for the S&P to get above 4,100.96. That was the high of December. And yeah, we've got all of January. Let me just double check here on the monthly chart. All of January, 4,053.62 was the high in December. So why have I got separate things here? This is not right. Something's wrong. Something's wrong. December, the high was, there it is, 4,190. So how could that be? Right. If by next week, all of next week, if we haven't taken out the 4100.96 high, and that's going to be tough at this particular point, but we do that in February, that'll start a gray leg B. What do we have? We have a monthly peak B because there's no other way I could count it in the Chapman wave methodology. We have a gray B, and I've been saying that there's a chance. Now, some of you are not used to this, but in the Chapman wave methodology, you can make a B and then drop sharply, but hold the low, that starting point, in this case, 2191.86 of March of 2020, and then have another underneath the previous high going towards it, but not breaking above it, a peak A, and then a pullback, and then a B, and then a pullback, and then a C, and then even a D. That D negates the B right here and says that's the one you've got to take, because that says to you that we have formed in the Chapman wave methodology a D where other things can happen. That's your objective, to go from a buy signal to a buy mode, and that buy mode should take you to a D. So I'm trying to answer the question. The question is, for your show today, are you expecting a trough D yet to follow in the monthly chart of the S&P in 2023 based on the Chapman wave model? Would be great to hear your assessment on the show today. Thanks, Kevin. So, Kevin, my answer is, at this particular point, I'm looking more at the upside than the downside, but it won't take much to go in the S&P down to 3490, which will start a leg D to the downside. Why do I say it won't take much? There is so much going on, and we can't ignore the fact that slowly but surely the idea of America at war cannot be ruled out. And that at some point has other ramifications, and the ramifications market-wise might be that the focus goes away from one area and into another, and therefore I can't rule out another tumble. But am I expecting a plunge down to the 3,300 level in the S&P? As long as this rotation keeps working, I just don't see that. In fact, at this particular point, I see a more likely target of the 4150s than the 3650 area. So that's, I think I'm answering it the only way I can, just based on all the technicals that I'm observing right now. So let's go to the QQQ, because what we're looking at here is that in the Qs, up $3 at 290.74, that rotation into the other areas is exactly what's working. And therefore, Kevin, what I am looking at is, we're looking at the Dow that was the strongest, with the S&P next, and the IWM actually stronger than the QQQ. But at this particular point, how we consolidate by rotating through the other areas, and so I always jump back to Shopify, which we had at 28 and we got out of it, and I can't believe it's at 48 right now. How dumb is that? Anyway, these things happen, and Shopify was at 176 in November of 2021, and it plunges down to the 32-ish level. No, it plunges down to the 23 level back in October, I think it was. And here it is, leg E in the daily, leg C in the weekly, and only a leg A in the monthly. But as long as you're moving from one sector to the other, and that's what we've been looking at, you can anticipate that higher levels keep holding for support. I've answered that. Now let's get back to our story. We want to look at other things. We've got a break coming up, and the Dow is unchanged, and the S&P is up 16. We'll be right back, and I'll just go to our, there you are, our short-term.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hello, so I've shown this in the den, and I was going through all the other stuff. Yes, I've got some questions I'm going to answer just in a moment. But from that spike with the Chapman Roman candle at 8:30, you see that big opens sharply. This candle opens at... this is the 1 minute E-mini. It opens at 4,051.25. That was the high. And then it plunges down to 4,037. And it closes at 4,045.25. So it closes, that bar closes at, 4,045.25. And that creates a Chapman Roman candle. If we went halfway into the wick and it's a 1 minute bar, I would say even if it held for even 1 minute, there's a really good chance it would go down and retest the low. But if it closes above that high within 2-3 bars, that's really positive. Well, it didn't. It went sideways. But then it started to move up. You see the MACD moved up, stochastic moved up. And then look at the way it walked the 9-period moving average. You remember yesterday I was talking about the 9-period moving average? Well, look how it ran all the way to peak A, B, C, D. Pulls back, and then there was an inside track propellant, a repellent line that was kept being a repellent line, and I drew in a channel, just a parallel channel. So all a channel is 2 parallel lines, and it went to a peak F/C. That's why I have the alternate count. There was nothing to do because it was still all the technicals were positive, and then it made a peak D. And if you did the measured move. I did it here, and that was successful. I should have done it here. That's because I was already busy at that time, but I'll do it now. If you do the technicals at that high and the technicals at this high, you'll see that it was fading. Look at that. Peak D, doji candle, peak D, the following bar, long-legged doji. The MACD is turning down. Stochastic's already way low. The on-balance volume turned down. And 2 bars later, the 9-period crossed negative. And then what happened is it pulled back sharply. But what I was doing as it was turning down and broke the support level, I said, where would it go to if it completely fell? We've seen this pattern over and over again, where the left side makes a big spike to the upside. I think it makes a huge kind of an arch formation, hits resistance. So I drew in from this low right here, a price time match. That's bar symmetry. And I put in an X right there, that X right there at 10 minutes, at 1 minute past 10, and it should hit the low that was made right here, which was 4,017.00 round number low. Well, it got there 4 bars early at 9:57. It went right under it and tried to form a base. But look how the MACD started to improve. The histogram started to improve. And look how it was all pink, 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 pink for the double bottom. But the stochastic was making a higher high. On-balance volume didn't do that. On-balance volume, you had to wait for that V-shaped turnaround. And finally, we've gone to a peak C. And what's the objective in the Chapman wave? Is to get you to a D. And then you've got to be careful because other things can happen. So what did it do? It went right there. And I drew in the Chapman wave. I drew a cup formation. People in the den already saw me drawing it. A cup formation with the left side, right side price time match. And I usually use the arch of a dreaded H pattern or the cup formation, a U at the top. And I use that as my fulcrum, the plumb line to go from the left side to have symmetry to the right side. And lo and behold, we got there a little bit early. And there's your peak C right there. Let me just move this away because the idea was to get you, whoops, from there to there, right there. And there's your peak C, and you just made a nominal D, and now you're pulling back. And look at this to coincide. I had a question earlier on. I put it into the den. No, it was not a leg D, a leg C. It was a leg E. And I'm going to go all the way back here. Right. Oh, I can't go all the way back because the notation you can't see properly. No. So I said, you might have missed that little peak A right there. At 5 o'clock in the morning, we made a trough and a trough B, and then it started moving up. That peak A, gray peak A, gray peak B, and then it changes because the MACD and stochastic really move higher. The 9-period crosses positive. It goes G/C. There's your D, pulls back for 1 bar, goes to an E, and right at 9:50, you get that turnaround. And what a turnaround from the 468-ish area, it plummets down to 4,035, and now it's making a gray leg A. It's still gray because the MACD hasn't crossed positive, the stochastic hasn't, it's only at 33%, so it's early in the game. So we'll just have a look at this. Now, because it made a peak D, does that mean it's all over? No, not at all. Look, the 9 is way above the 14. The MACD, I should have been trading this. I shouldn't have been talking this. There's your E, and I'm calling it an E, not a brand new A, even though it made it within 3 bars. So I always put in the little plus at the bottom, plus at the top after peak D. If in 3 bars it crosses to a new leg up, says maybe you've got a wrong one. Maybe you've got a Chapman wave instant restart, but just keep it in mind. That's all you're doing. You don't have to say I have a Chapman wave restart. It's a potential restart. So, okay, within that context, let's just get back to our story. A question came in, can I look at PCT? We had looked at this the other day. Oh, ARC and PCT. I'll do them both. PCT. PCT is trading at 8.44, up 6 cents. It made a peak E the other day, and I said I'd been looking at it because it's Pure Cycle Tech Inc. recycles contaminants into pure polypropylene. It sounds like it should be the right thing. It's been acting well, and all I would do is if you wanted to add to it on the 200-period moving average at 8.25, maybe you could add to it, but that has to be a trade. That one you have to have a fairly tight stop. But I'm looking at it saying, if in fact by Wednesday of next week it's even able to touch, it's 80.44. If it just even touches 88.82, that's the sign that you want. That it's just creeping it way up. I don't know if it'll have a big power move on the way up, but the MACD is good. Stochastic starting to weaken. On-balance volume is pulling back, but the 9 is way above the 14. So that's just saying that's strength. Plus you've got all this. You've got the 200-period moving average of 8.25. You've got the 14-period moving average of 8.15. So you've got your cushion here. I wouldn't get too carried away. I just treat it as a trade. Next question came in. Could I look at URA? Have I finished the other things or have I just moved on? Yeah, URA is Global X Uranium ETF. That monthly chart says it's doing well. It's forming a kind of a rectangle formation here. So it could trade within that band for a little while. If at any point at 22.83, it starts to trade at 24.35 or higher, That is really good action. But it's made a peak C in the weekly chart. It pulled back with a higher low, and then inside that, it's got a peak A and a B and a C. The MACD's good stochastic's finally at 87%. That's a good sign. And look at the way it used the 200-period moving average to power higher. I've got it as leg E right now, but the stochastic's at 97.09. That is fabulous action. So uranium is in play, and the question was UEC, what we once had, we got out of it, is trading very nicely. That's at $3.97. Uranium Energy Corporation, not quite as positive a monthly chart, but pretty much the same thing. Weekly chart is not as good, and the daily chart has gone to a leg E. I like it. I like it as a trade, but I like it each time it tests the 200-period moving average of 378. Coming off there is important. I'll be back in a moment. Dow's up 61, S&P's up 25. I'll be right back. Basil Chapman. I get you.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Folks, so we got a question as well about, just to complete that thought, where was I? The thought was uranium, yes. So uranium stocks are moving, but you got to be very selective, number one. And number two is I would think right now maybe a little bit generic in this particular market, because certain stocks in a group act really weakly and other ones act very nicely. So that's what I'm saying. A natural gas, I never finished all the other things. Natural gas making a lower low. Wow, look at this. And we've seen this in natural gas. You remember what happened here? This is the natural gas. It has these spikes back in June or so, was August or so of 2018. It ran from the 550 area all the way to 8, and then it just plummeted down. Then we saw the same thing back in 2021. We were in peak A, peak B, peak C, and peak D, had a beautiful move up, and then all of a sudden it makes this plummet. Almost, look, this is a leg B to the downside, but except for that little mini pop to the upside, it's really almost like a single leg down. When this completes, invariably you get a really powerful move to the upside. Powerful move to the upside in a move like this is sometimes where you look at the chart and you say, well, it could get back to, just a month ago when it was in the 420s. And here it is at the 270s. So remember, a powerful move off a low gives you a really good percentage. But when you look at it going from 11 down to 272, that is very, very ugly. So every technical aspect that said this is about where it should have a pop-up, the pop-up hasn't. This is really important to me. The pink 9-period moving average crossed positive, crossed negative. There was a bounce and it went above it. And that was the last time it's been above it in 16th of December. Well, 16th of December is about 5 weeks ago. Since then, not one of the moves has been able to, it's touched the pink 9-period moving average, which is way above the 14. It's very negative. It's touched the pink and it couldn't close above it. It hasn't even closed above it once in 30 bars or something like that, 26 sessions. And the stochastic is way oversold. The on-balance volume is way oversold. The stochastics are 13% off its low. MACD is off its low, and yet the price hasn't done a thing. So I would say I would much rather forego a couple of points. I know that it's great to be able to get these at exactly the low, but sometimes you try it and it just doesn't work. So the UNG is making a lower low today in leg D, and the technicals are almost the same. The stochastic is way down at 8.9%. The on-balance volume is just so oversold. And I'm thinking that if you look at the weekly chart with that symmetry, the bar symmetry took you to 3 weeks ago, and now we are below. This is the continuous contract. So what was the price? I always have to change that. Back in the week of the 24th of December, 2021, I would say that's about a year and a month ago. We'd call that a guinea in English. You remember, £1, £1. 1169, and we're at 936 right now. We've undercut it for the third bar in the weekly chart, and look at that monthly chart. So I just get it off my radar. Let us start to find support. I would sacrifice getting the exact low at 9.38 so that you can get a move up to 9.68, and then it makes a lower low. I just sacrifice that for a move that says this is a low. It's not the low. It's a tradable low because now we've made a peak A and we've pulled back higher than the original low trough, and now we're making leg B. That's just for the first time. Look at this. It hasn't even gone to a B. Even that A that was that was in December failed. So it's made A minus. Every single rally has had one pop up and failed. I would wait for leg B to say maybe. Okay, I just wanted to get that out of the way because I know it's on my mind. I like to pick the lows if I can because once you get a low, it gives you such a nice cushion. Look like we've got the lows in the diamonds and the SDOW. The UDOW. It's real nice when you're able to do that because it gives you a cushion. You can trade around it. Otherwise, you have a stop in, you get taken out, you have to get back in. It's a little complicated. It can work, but it becomes a little more complicated. So I just wanted to get that out the way. And the other thing is that the question came in about crude oil itself. So crude oil trading kind of sideways. It made a peak D. It's gone sideways at the higher level. If you look at the monthly chart at 118, I don't know if it's still 118. It's probably, I've had to change it twice already. So that would be, now the top is 99.11. Whew, boy, these things get changed. Eh? Let's go to 99s. and you've come down sharply to the 70 level, and now you're back at 81. Look, it's just hugging the 200 period moving, the 14 and 9 period moving averages in the weekly. They haven't crossed positive yet. So I think that crude oil is there, but it's just there. But if you look at the XLE, now this is energy. This isn't just one little, we're not looking at one issue, conglomerate that is. Where did that go? Hello, anybody home? There it is. Oh, okay. Whew. You know, with these mice, sometimes you just hit something without meaning. Okay, so now I'm looking at the XLE, and the XLE has had a really nice move up. It's got a recovery high in the daily chart. This is now either a leg B or an FF/B. The weekly chart is still making that peak C. You've just had a rally inside. I meant to put this in yesterday, and I completely forgot. There's your inside rectangle formation that says if you start to make higher highs and higher lows, either in the same time frame or maybe a shorter time frame, you can go to a D or an E just under or right on or just above the previous high. In this case, this is the S&P Energy Spider Fund, which is the high of the week of the 18th of November at 94.71, and that was 94.71, and here we are at 91.56, acting really well. It's in play. It's doing very nicely. Exxon 114s was the level we were looking at for umpteen weeks. And what happened is today it spiked up and it's at 116.12. Baseball eyeballs in the Tiger YouTube, really nice. And all I can say is that I've got this as a leg E. There could be alternate counts, but according to E in the daily and E in the weekly. And how it closes is going to be very important, because what do you know? What will I do? I'll be measuring this high right here. That was in late October, early November, and any high that's made here. I don't want to put that in vertically now because it doesn't mean anything. I haven't made a peak yet. But and we need to close decisively above the 114s. Looks like that could happen, and that'll be really positive for ExxonMobil. Question came in with looking at the semiconductor. Oh, did I miss something? Yes, I was going in order, and the next thing was question. Oh, ARKK. Yes, that's the rotation I'm talking about. So now you've got ARKK, Kathy Wood. It's her fund. I think finally she's going to be seeing some really nice performance in this first quarter, and it's trading very nicely. It's down off the high, but it's at 37.89. It was in the 28s just recently in December. So this is good action, not great good.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yeah. So I've got a question here from my engineer. I hope he answers it. And I will be doing something. We'll see. But in the meantime, back at the ranch, let me just go through. So PA&W, Palo Alto Networks, cybersecurity, one of the better cyber stocks that we've seen because it's held from the high that was made back in about just under 220 in February or March of this past year. It ran all the way down to the 130s and now it's trading at 156. Yes, this is a very nice move. I just needed to check if I didn't miss something here. 52.16, 32.19. Yes. So this is a leg B, and the stochastic's good. So yes, we're finally starting to see something in the area of cybersecurity for subscribers. That's what we've been waiting for. I don't know what we're going to do just yet. I have some ideas. I've been waiting actually for this very thing to see not just the move, but the 9-period moving average crossover in the daily, so that the weekly chart we can assess. So far, there's a lot to do in terms of that area. Now, there are a couple of things that I want to look at here. So I had questions come in, and then statements that were made in the den. So I think it was it Duffy who said cane. So cane is the sugar, Decurium sugar fund. Yes, I've been looking at sugar for a while because we own the DBA, which the DBA has sugar in it, and it's acting really nicely. I didn't know that today it already popped like this, but I knew that it had made a peak B. It was making a cup formation, and sugar has been the one that's held closer to his highs in that whole area. In fact, what I'm going to do, let me just check something here. I need to, I think I might be wrong. If I'm able to, I know none of you will mind if I suddenly have to take about 30 seconds or so if I wanted to put a trade on or whatever it is. I think, let me just double check. So Steve is out today. So I've had so many questions that I think I can take the next hour. Today's Thursday. I don't want to miss any. Yes, I'll take the next hour, and I'll take a lot of those questions. And this time I'm going to do a lot of to my email, Basil Chapman at TFNN.com. Send any questions like you do to Steve. Of course, I can't do like Steve. Steve does a wonderful job every day with a whole ton of questions. I'll include those. So what I'm going to do is I'm going to come in for another hour. We're going to wrap it up. We've got a break coming up, of course. We'll wrap it up. I wanted to show you that I told you about the Chapman Wave instant restart, that we don't consider it an instant restart. We just say that there's a possibility because that's where it can turn. Well, lo and behold, we made the E. Remember how I tested the left side, right side, vertical technicals back in at 9:30 this morning to the 9:40 time frame, and I said very weak at peak D. Well, we've got a peak E. If you go to that peak E in the 1 minute chart, and remember, it doesn't have to be that, oh my God, 1 minute chart. No, I use it because I get, you'd never be able to tell, maybe a monthly chart, but almost any other chart, you wouldn't be able to tell whether this is a minute or a daily or a weekly or a monthly, or maybe a monthly, but maybe not. But a chart is a chart. It's a fractal of human nature. So when you measure from that level right there at 9:20, 5, and you go to the cup formation failure pattern that couldn't make it higher, and it went to the high of 1036 at 4,058.50. Look how that failed. Look how the MACD was down, stochastic was down. So you could look at this. If I did this in terms of a 1-to-1, if I use the what so many people at TFNN do, or most of the technicians do that. Of course, I've done it in my own way because I always have to develop patterns that are maybe sometimes standard, sometimes just totally original. My peak D is totally original. I've never to this day seen anybody basically using that particular pattern. And yeah, you could do this, but remember, I don't like to do, look at that distance to the downside. I would just say, if it's coming down, I'd rather be looking at the price time match here from there to there. And sometimes a visual look says, you know what, it's just too quick. I can't see it coming down this quickly. So then I make adjustments. But in the meantime, the same as I did over here, when I did that diagonal line, I'm doing a diagonal line here and saying it's a little bit too quick. This is the one I would use right here. I'd actually even push it out to the trough. I like to use the trough of the cup. So let me do that right now. So I'd go to this trough right here. That's green. Oh, well, let me first finish this. And then I'd move it to the right and say, okay, if it's going to come down, and patterns seem to be matching so often over the last 2 weeks, where it makes a pattern, goes up, and it makes this huge kind of arch formation and comes back down. Sometimes there's a rectangle within that you've got an arch, and it comes back down. This is what I'd be looking at. I'd skip that. I'd say, yeah, that's great. That's very nice. But really, you have to go one step at a time. And one step at a time says, this is what I'd be looking at. That by 11:04, as Steve would be starting his show, and he's out, as I say, he's out today. In fact, I'd even make an adjustment. I'd make this to that peak right there. And there we are. I'm saying that if this is going to tank, watch this. This is your support line. Chapman Wave inside wedge, target, support line. And that just says these are the levels to monitor. But if it closes under that, see how it can even come back, if it's able to come back. And that will I'll put an X in here to say, if this is going to work, it's going to come back to the 4,035 level, and it will come back at about that time, which is about 11:04. All right, we'll come back to that, and we'll see if it works, because this could just be another breather in the move towards the upside. I don't see it right now. I see it more as this potential cup formation, arch formation right here. And we'll see. All right, so I will be back. Steve is out, I believe. Okay, he's out. I'll do that hour, and of course I'm not doing Steve Rhodes' show. I'm doing my show in that hour. Here we go. If I can just type the right thing in there. Tiger. Okay, so we've got a moment to go before we go to the final break. And let me just do this here because a couple of questions have come in as well. Yeah. So yeah. This is the corn. So corn is acting really well now. It's going towards the highs. That's why this DBA, I'm watching it very closely. The DBA, which is the DBA Agriculture Fund, which we are long, I'm watching it really closely this week because it hasn't been acting well, DBA. But, look at that gap to the upside from the 1980, what was that low? That was 1982. That was a few days before. This is the low. Leg E goes to the downside. Trough E at 1925. 1925 trading right now, 1977. Yep, so this is 25, no, 32, and that is E. So this is going to be very important. I've been talking about rotation, and as something's going down, other things go up. And we might be seeing that now in the, this is now a leg A. That's an A minus over there. This is a new gray leg A. Call it gray leg A, because the technicals haven't confirmed it yet. And this is a leg D to the downside. Price time match. In the 1922 was the low in July, runs up to the 20s, comes back to 1925, 3 cents higher. Isn't it amazing how we're seeing this in so many charts? I'll be back. Basil Chapman, Dow's up 13, S&P's up 18. And as I say, I'll be doing this segment, and then I'll do Steve Rhodes' hour.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, so we're talking about this 1-minute chart. I drew this in. We don't know if it's going to go back to the level that I typed in with an X, and that would be to the low of 4035.25. Oh, so 44, 43, 40. Oh, there it is. Bang, boom, 34. That was it. That's why I should have been. All right, well, it doesn't matter. Okay, so that was our target. It got there in an earlier time frame. If I'd used the time frame that I wanted before, initially I'd put in here, it would have been to the, let me just see. New parallel, make that pink. Get rid of this one here. I would have been able to do this. I was a little conservative because you just don't know how long. Oh, look at that. It's 2 bars late. All right, not bad. So that would have been the X right there. So what I'm going to be doing now in for the next hour coming up, I've got a bunch of questions that have come in. I'm going to do them. Now was mentioned, NOW is a symbol statement here. Shop has no earnings. Investing is earnings. You're finally looking at GE. Yep. I've been looking at GE for a long time, and but a percentage gain is a percent. What difference does it make if you have say Shopify from the 28 level and it goes up 20 points to GE going up 20? It makes no difference. I agree with you about the concept of earnings, absolutely. But some of these places of earnings, but they haven't shown up in the prices. I think this quarter here is the quarter that earnings actually start to become important. So with that said, I'm going to tell you that I'll be back here. Steve Rhodes, I don't know why, but Steve's not able to make today's show. So I'm going to use that hour because I had so many questions coming in. And as I say, send to Basil Chapman at TFNN.com. I think I've already started to get 1 or 2 emails. I hope that it comes updated. For some reason, I get them like, they should be immediately. I don't get them immediately. So I'm using 2 different, I could use 3. Now I'm using 2 different computers to check to see if anybody sends in. We're going to wrap it up here. Dow's down 70. We expect this a consolidation session. S&P is up 1. Basil Chapman, Tiger Technicians, wrapping it up. And I'll come back and I'll do Steve's hour in the next few minutes. So I'll do the news and then